course, there's a lot of uncertainty that has our next guest turning to Richard Bernstein is turning to gold, CEO and CIO of Richard Bernstein Advisors. Rich, how have you been? And is that real? Is that the playbook right now? I mean, it's been a great investment.
That's a little bit of an exaggeration in that we're turning to gold. We've had some gold in our portfolio for many, many years. We've always used it as a potential ballast against volatility, and it's doing exactly what it's supposed to do. So that's nothing new for us. We've always had somewhere between 3 and 5% of our multi-asset portfolios in gold, and that's still true today.
So all of that said, what are you really doing amid all of this? I'll use the U word because when the Fed did, everybody took notice. Do you think that we're maybe past peak uncertainty now and we can start to look past some of the noise and drama? Or how are you kind of changing, if you're changing things in response to everything that's happened?
The cute answer to your question, Kelly, is are we past peak uncertainty is I don't know, right? That's the cute way to answer that question. But I think, look, there's a possibility that that could be the case. I think, what people kind of miss in the daily discussion is that an investor really doesn't care whether policies are right or wrong, right? I mean, that's something you have over a beer, at the end of the day. But as an investor, that's not your concern. What an investor needs is clear and consistent information so that an investor can make a decision, is an opportunity worthwhile or not? And when everything's moving at a very rapid pace and there's no consistency and no clarity, it makes that very difficult. And I think what we're seeing, the volatility we've seen in the stock market, is just simply the investors repricing the U.S. stock market for a higher risk premium to account for this uncertainty, right? The same way you'd think that high-yield bonds yield more than treasuries, we're seeing the United States being repriced to account for that extra risk.
Is it all about tariffs, Richard? I know our network, we're just talking about tariffs all the time, and I get it, and I love this company. It's so nice. But I will say that earnings still do matter. Earnings estimates still do matter. And I do wonder if we see a bunch of companies come out and lower their earnings guidance for the rest of the year at this next earnings season, then what? Earnings, I assume, still matter to this market. It's not just tariffs.
Oh, absolutely, Brian. Yeah, absolutely. I mean, earnings are the key component to stock investing, always are. And I think right now,
then why is all the dialogue about tariffs?
So I think two things. Number one, I think second quarter earnings are pretty much in the bag, right? Or first quarter earnings, rather. We're through March. Basically companies know what's going to happen for the first quarter. I think as we look out to second quarter and third quarter, the range of outcomes for that earnings forecast becomes greater and greater. That could be tariffs, that could be employment regulations. There's all kinds of things that are starting to affect that, say second quarter, third quarter, fourth quarter earnings forecast. But more importantly, it's just the range of possibilities that is causing this to happen. So when people say it's just tariffs, I think it's a contributing factor, but I wouldn't say it's just tariffs.
Do you think we're higher at the end of the year and looked past all of this, or the clouds darken?
Honestly, I mean, I don't know how anybody could forecast that right now. Yeah. I mean, I'm serious. I don't know how anybody could make a forecast like that. I don't know how any analyst can come on your shows and say the company XYZ is going to make, $1 or $1.50 or $2. What's their earnings estimate? Because the earnings estimate could change so dramatically in 2 weeks. I mean, meaningfully and dramatically in 2 weeks. So I think that's the issue that's going on here. It's not whether things are good or bad. It's the consistency and clarity that I think the market is desiring right now. And just like any investment where there's a broader range of outcomes, you demand a higher risk premium. That we're seeing in valuation. I mean, we've knocked about 3 to 5 multiple points off the S&P since the beginning of the year. I think it's a pretty simple story as to what's happening.
Absolutely.